because of the pandemic, deal activity in April and May had come to a near halt. And a lot of people were predicting a doomsday scenario. But from June onward, investment activity seems to have picked up a lot. Could you just give us a sense, of the venture activity and whether you've seen a drop in valuations and deal sizes, and also perhaps just give us a sense of whether normalcy has really returned in the venture space?
Look, obviously, we are going through some unprecedented times, at least for many of us who are in the investing world, in the startup world. We've obviously seen also significant impact in deal activity, at least in the first 2 months, like you rightly pointed out. Going into April and May, investors were trying to understand in the current environment how they meet startups, how they work with them, how they evaluate them, and so on. Meanwhile, companies themselves, startups themselves, were trying to figure out the impact to their business from the pandemic. And for many people, and most of us would have thought maybe late March, early April, that this is something that will be there for a couple of months. Maybe we all get back in July, August. There'll be a sense of recovery, etc. And nobody expected things to be much more prolonged and elongated, and it became clearer as we moved through. So then step two is kind of saying, hey, look, how do we first assess what's going on? How do we survive through this period? And then how do we build towards the future, right? So most companies have, in the first couple of months, focused on reducing their costs, making sure they have a runway for them to kind of think about future. And then in June, July, people have started, slowly coming back to some level of how do we operate in this new normal world. And in a way, that is also reflecting in how maybe VCs and others are also investing. So while April and May were broadly slow months, there was still some activity, and there was some investments. Most of them may have been carried over from companies that you're meeting and kind of having discussions with, and you took them through. But as you look at June and July, and as you know that this is going to be a much more prolonged kind of a recovery period, people are coming back to normal. Most of us have started to, invest over Zoom in a way, like learning how to do this, how to assess founders, how to spend time with them and learn about them much more on virtual mediums. So we've kind of evolved and adapted, which is, I'd say, the number one thing about the startup world, which is never say, you never kind of give up, and you're evolving constantly and innovating for you to survive and, thrive as things start getting on.
Right. So have valuations and deal sizes remained pretty much unchanged, even if there's been a fall in deal volume?
Yeah, it is interesting and surprising. One would have thought in this world, valuations dramatically correct. I would say, valuations have not corrected that much. You obviously saw public markets have a significant correction, and then things have somewhat come back. We think of private market valuations to be sticky on the way down, meaning they don't come down that quickly, and it takes a elongated period of time when the activity is subdued for valuations to come down. But again, a lot depends on which sector you're in, right? In fact, if you're in tech, health tech, like you pointed out, valuations have not corrected. Maybe they've corrected upwards in a way that there is much more demand for some of these businesses. And if you are in segments like in travel, etc., either capital is not available, or if it's available, you will have to somewhat forget what your last round valuation was, and then relook at valuations today.